When I hired my first employee, I thought payroll was just paying people. Cut the check, call it a day. Turns out there's a lot more to it than that. Like payroll taxes. As a small business owner who's learned through experience and with Intuit QuickBooks as a resource that helps me understand and manage payroll the right way, I know how important it is to get this part right. So if you've got employees, let's break down exactly how payroll taxes work, what they include, how to calculate them, and how to avoid those oops moments that can get expensive. I learned some of this the hard way, so you don't have to. First, jot down this payroll tax formula or bookmark this video so you can come back to it. Take gross pay, subtract pre-tax deductions, and multiply by the right tax rates. What are tax rates? They are applicable percentages for all required payroll-related taxes. Typically, federal payroll taxes, federal income tax, and state and local payroll taxes. Now, let's talk about how to calculate payroll taxes in 6 steps. Step 1, gather your employee info. You'll need their W-4, pay rate, total hours worked, and any qualified pre-tax deductions like health insurance or retirement contributions. You'll do this each pay period, but once employees are added to your payroll system, depending on the software, their info should update automatically. Step 2, time to figure out gross pay. For hourly employees, it's hourly rate times the hours they worked, plus any overtime, bonuses, or commission. For salaried employees, you take their annual salary and divide by the number of pay periods, then add any bonuses or commissions. Gross pay, or the total before taxes or deductions, is what you start with every pay period. Step 3, figure out how much to withhold from each employee's paycheck. Start with federal income tax, based on the employee's W-4 and IRS tax tables. Then add FICA taxes, short for Federal Insurance Contributions Act, which fund Social Security and Medicare. That's 6.2% for Social Security and 1.45% for Medicare, for a total of 7.65%. For FICA, what your employee pays, you pay too. It's an equal contribution. You'll match that same 7.65% on your end. Step 4, don't forget your state and local payroll taxes. These can include income tax withholding, unemployment taxes, and sometimes city or county taxes, depending on your state or location. Step 5, employer-only taxes. These are the ones you pay yourself, separate from what you withhold for employees. They can include FUTA and SUTA. FUTA stands for Federal Unemployment Tax Act, and SUTA stands for State Unemployment Tax Act. Both fund unemployment benefits for workers who lose their jobs. What I'm sharing comes from my own business experience. It's not tax advice. Be sure to check with a tax pro about your specific situation and local requirements. Before we get to the final step, let's look at when payroll taxes are due. Most small businesses deposit payroll taxes by the 15th of the following month. And lastly, double check your totals before filing to ensure withholding payments and reports all match. You can file manually, but many small business owners use payroll software like QuickBooks Payroll to calculate, file, and pay on time. And that's how you figure out payroll taxes. You take care of your team, now you can take care of payroll like a pro too. If this helped, hit like, subscribe, and share it with another business owner who could use a little less payroll stress.